On June 12th, 2026, SpaceX set its final pricing for the IPO, $135 per share. And here's the thing. I spent the last week watching the news coverage, the hype, retail investors piling in. Everyone's celebrating like this is some kind of victory lap for Elon and the future of space. And I kept asking myself, does anyone actually understand what just started? Not the IPO itself. That part's obvious. SpaceX raised $75 billion at a $1.77 trillion valuation. Largest IPO in history. The numbers are wild. The excitement is real. But that's not the question that matters. The question is, what happens 90 days from now? Because SpaceX just went public. And the real risk? It starts after 90 days. Let me explain why that timeline is everything, and why I think most people are celebrating at exactly the wrong moment. When a company goes public, there's this thing called a lockup period. Usually lasts between 90 and 180 days. During that time, company insiders, founders, executives, early investors, employees with stock options, can't sell their shares. The lockup prevents a sudden flood of shares that could tank the stock price. If everyone who's been holding SpaceX stock for years could suddenly sell on day one, the market would drown in supply. Stock price would crater. New investors who just bought in at IPO price would get destroyed. So the lockup exists to protect the stock, keep it stable, give the market time to find its footing. But here's what I find fascinating. The lockup isn't there to protect you. It's there to protect the insiders. Think about it. Employees and early investors want shorter lockups so they can cash out sooner. The underwriting banks want longer ones to keep insiders from flooding the market and sinking the share price. The company sits somewhere in the middle. They want to keep everyone happy, but they also don't want it to look like insiders have zero faith in the company. And that right there is the whole game. Because when that lockup period expires, when insiders are finally allowed to sell, what do you think happens? Palantir is the cleanest example. Retail enthusiasm drove the stock from $10 to nearly $40 between September 2020 and February 2021. When the lockup expired, insiders, including Peter Thiel, sold tens of millions of shares. The stock fell 13% in a single session and spent months recovering. Rivian dropped about 20% in one day after Ford disclosed it would sell its stake at the 180-day mark. Uber hit an all-time low on its expiration date, down 40% from IPO price. And this isn't cherry-picking. The pattern holds. The higher the speculative premium at IPO, the more painful the expiration tends to be. So let me ask you, what's SpaceX's speculative premium right now? SpaceX lost money last year and had $18.7 billion in sales. A $1.77 trillion market cap is about 95 times its sales in 2025. That's even higher than Palantir, one of the most expensive mega-cap stocks, which trades at 78 times sales. I'm not saying SpaceX doesn't deserve a high valuation. Starlink is a genuine breakthrough. The company did 161 launches in 2025. All other U.S. commercial space companies? 37. SpaceX dominates the industry in a way that's hard to overstate. But here's what troubles me. And I want to be honest with you about this. SpaceX posted a net loss of $4.94 billion in 2025, reversing the $791 million profit it had in 2024. A big chunk of that reversal, xAI, Musk's AI company that SpaceX absorbed in February 2026 in the largest corporate merger by valuation in recorded history. xAI burned an operating loss of $6.36 billion last year alone. The combined entity has accumulated a total deficit of $41.3 billion. Musk's top priority is winning the AI race. He's tackling this through xAI and Tesla, and now wants to bring SpaceX into the fray. Taking SpaceX public to consolidate vast resources signals his determination to win. So, SpaceX isn't going public because it ran out of private funding. It's going public to raise $75 billion to build AI infrastructure in space, to win a race that has nothing to do with rockets or satellites as most people understand them. That changes the risk profile completely. Because now, you're not investing in a space company that happens to be expensive. You're investing in a conglomerate that merged with an AI company that lost $6 billion last year, and you're betting that Elon can somehow turn satellite infrastructure into the backbone of artificial intelligence before his competitors do. Maybe he can. I mean, if anyone could pull that off, it'd probably be him. But that's a very different bet than SpaceX dominates launch and Starlink is growing. And here's where the 90-day clock starts ticking. SpaceX has taken a slightly different approach, creating a tiered lockup schedule. I don't know the exact details of every tier yet, but what I do know is this. The lockup period prohibits insiders from selling shares for 90 to 180 days following an IPO. Let's say it's a standard 90-day lockup for at least some portion of insiders. That puts the first expiration around mid-September 2026. When lockup periods expire, thousands of employees become eligible to sell at once. If you don't sell at lockup expiration, your next opportunity might be 3 months away. A 30% decline during that period? You can't respond. Lockup expiration provides the cleanest, most unrestricted selling opportunity available. Think about what that means. You're an early SpaceX employee. You've been holding stock for years. You just watched the company go public at a valuation that would make you wealthy beyond anything you imagined. The stock is trading at 95 times sales, and in 90 days, you get your first chance to sell. Are you holding, or are you taking some money off the table? I think most people take money off the table, not because they don't believe in SpaceX, but because they'd be insane not to lock in some gains when the valuation is this high and this untested. And if thousands of insiders think the same way at the same time, you get what happened to Uber, what happened to Rivian, what happened to Palantir. In anticipation of this event, many investors will sell their shares in the days leading up to expiration to get ahead of the drop. But this behavior often causes the share price to drop days before expiration, in addition to dropping when the lockup actually expires. So the price doesn't just fall when the lockup expires, it starts falling before that because traders anticipate it. And then it falls again when the actual selling starts. In 2019, Uber dropped 17% in the days approaching its lockup expiration. 17%. And Uber wasn't valued at 95 times sales. I've been thinking about how to say this, and I keep coming back to the same image. Right now, everyone's watching SpaceX's stock price, watching it climb in the first few days of trading, watching retail investors pile in, watching the media celebrate the largest IPO in history. But I think what they're actually watching is a timer. And the timer just started counting down. 90 days from now, the insiders get to decide. Do they believe in the $2 trillion AI and space vision enough to hold? Or do they take profits while the valuation is still sky high and the market is still euphoric? You could argue that Elon himself will hold, that Gwynne Shotwell will hold, that the true believers will stay in. And you know what? You might be right. The filing discloses super voting Class B shares carrying 10 votes per share, giving Elon and insiders voting control after the IPO. So Musk isn't going anywhere. But voting control is different from selling pressure. Musk can keep control and still watch the stock price drop 20 or 30% when employees and early investors start cashing out. And here's the uncomfortable truth I think most people are missing. SpaceX doesn't need the stock price to stay high after the IPO. They already raised the $75 billion. Money's in the bank. The IPO succeeded. Whether the stock trades at $135 or $90 3 months from now doesn't change how much fuel they can buy or how many satellites they can launch. but it changes everything for the people who bought in at IPO price. Often, a company's stock price drops at lockup expiration. The SEC actually advises investors to look into a company's lockup period before making investments. If the firm is still in a lockup period, you might want to hold off on investing until it's over. This lets you profit from a potential price drop and prevents you from losing money by buying a stock that drops in value. I'm not saying SpaceX is going to crash. I'm not saying the IPO was a mistake. What I'm saying is this: the celebration happening right now is premature. The real test isn't whether SpaceX could go public at a record valuation. The real test is what happens when the lockup expires and the insiders get their first real chance to vote with their wallets. Dan Coatsworth, head of markets at AJ Bell, said SpaceX could well be one of the most divisive stocks to hit the markets in years. I think he's right. And I think the division starts in about 90 days. So if you bought SpaceX at the IPO, or if you're thinking about buying now while the hype is still strong, just ask yourself one question: what are you going to do when September comes?